Hi there, welcome to Kneppy Invest. Trading has finished for the 24th of August 2023, and just like August 22nd, August 21st, and August 20, we have seen some interesting share price action on the market today because companies have released their financial year results or half-year results. Now, this is the top gainers for the day according to Market Index, ranked by market cap. One of the best performing companies on the ASX is Wisetech. The reason it is one of the best performing companies today is not because they released positive half-year or full-year results, is because yesterday they released negative full-year results. The market punished Wisetech. Share price dropped 20%, and no surprise that the share price has bounced today because, in my opinion, that was potentially a little bit of an overreaction from the market. Other good performers on the ASX today, ranked again by market cap. ARB Corporation, Mesoblast is on here, up 18% on no news flow. Chrysos Corporation up 12.3%. Interesting to see the chart for that company. I won't talk about Chrysos Corporation today, but I definitely will talk about them in tomorrow's video. For some reason, the market is loving that company, and I'm happy about it because I'm a shareholder. Appen up 7.8% today. I don't think they released any sort of results. And really, when you look at the best performing companies today, not many, only a few. I'm trying to think if any of these released full year results today. I can't think of any. Quantum Intellectual did, up 8.5%. So, yeah, Laser Bond, which I will show you the chart today, up 7.7%. And that's a company I own. So I'm a little bit biased when it comes to a laser bond. Now onto the worst performing companies, and we have seen a fair bit of action in this group of companies. And again, I'll rank these by market cap, and we're able to see one big rank or big market cap company down 11.6%. Used to be a cult stock on the ASX. Ramsey Healthcare released their full year results, and the market didn't like it. I haven't looked at them yet, but based off the market reaction, they didn't like it. Potentially a possible buy. I'm just saying possible. But the problem with Ramsey Healthcare is the lack of growth over the last 5 or 6 years. We also have Perpetual on here, Levisa Holdings. I think this is a potential overreaction from the market. And again, I might be a little bit biased because I'm a shareholder of that company. Insignia Financial, used to be called IOOF, down 11%. Macquarie Technology Group, down 7%. McMillan Shakespeare, down 10.4% after being one of the best performing companies yesterday. And yesterday, they released their full year results. Not only did we see positive reaction in regards to McMillan Shakespeare share price, we also saw Smart Group share price going to run, SG Fleet share price going to run. And today, Smart Group released their half-year results, and hopefully they'll be on the list somewhere here. Yep, just down below McMillan Shakespeare. Smart Group down 11% today on their half-year results. We also saw big down days for Costa Group. Judo Capital down 18.2%. Nuix has just been, their share price has been amazingly volatile over the last few weeks, down 10% after being up 10% yesterday. Cedar Woods, IGL or IV Group released their full-year results. Anything else here? Nothing that I can say that sticks out. Anyway, so Midway Group down 8.5%, but their market cap of that company is only 52 million. That company does stuff with wood, chips or something. I have no idea, but something to do with wood. Anyway, let's have a look at some of these charts, starting with Wisetech. And I might look at the 1 hourly charts. When you look at the daily chart for Wisetech, the share price is still in an uptrend. So you might be saying or thinking, how can the share price be an uptrend when the share price just dropped 20%? Well, the main reason behind that is because the share price had been on a significant run since the start of 2023. In fact, the share price went from $50 to up to $88 in about 8 or 9 months. So even though we did see a 20% drop in share price in one day, a nice little bounce today, mind you, the share price is still an uptrend. In fact, that bottom green area, that green zone, is a long-term support for Wisetech. So it's not surprising to me that we have seen a bounce today with this company. And if we do take a look at the hourly chart, we can see a really good bounce, not only today, well, yeah, maybe today. So we're looking at the past 6 hours. Yeah, the bounce started late yesterday. So it is hard to know when a company, well, when the share price of a company is significantly hit by their financial results, whether to sell out on that result. I do have this problem in the past, whether I do sell out or not. And there would have been some people panicking yesterday, some retail investors panicking yesterday, and they would have sold out around about under $6 or $70, and the share price has gone on a nice bounce. But a lot of times, the opportunity to sell is when you do see that bounce. So potentially for those who are more bearish on Wisetech now, maybe this little bounce in share price is the time to take profits or sell out of this company. It's still overvalued, in my opinion. Now, I'm a shareholder of this company, and I think it is significantly overvalued. But just because I believe it is significantly overvalued doesn't mean the share price will get back to fair value, because sometimes the market can remain irrational for long periods of time. So, for instance, the PE ratio of this company is still over 100. But if you have a long-term view, and if this company keeps on growing like it has over the past 5 or 6 years, right now it could be good value when you're thinking 5 or 10 years down the line. And that's the way I look at Wisetech. I'm a shareholder until I see some significant changes to their business model, some structural problems with the company. Those are the catalysts for me selling out of Wisetech. Not there yet. So in today's video, I'm not going to look at many of the financial results because I don't look at the financial results until a few weeks after they're released. Sometimes I will take a look, not a close look, but just a glance-through look at the results. So I did have a glance-through look at Wisetech's results, and there were a few things that I was a little bit unsure of, particularly when you look at profit, but revenue growth was still absolutely spectacular. And I think the market might be overreacting to this just based off the valuation. There probably would be some investors a little bit spooked about that P ratio above 100. Now on to, what's this one, ALU? It is Iluka Resources. They're in the sands, mineral sands, that sort of thing. And just based off this 1 hour chart, this share price of this company has been in a downtrend for a while, but the share price looks like it is on a nice little support area or support zone at around about $8. So let's have a look at the daily chart for this company. Iluka Resources, this was a negative result. And potentially the market was hinting at the negative nature of this particular financial results based off what the share price was doing over the past month and a bit. Share price had dropped from $12 down to about $9.20 leading up to the release of these results. Share price down $8 to $8.32. Share price did drop 11.3% on the day they released these results. But if we look at the weekly chart, we can see the share price is now on a nice little support zone. The reason it's a support zone is if we go back through the past 2 years, the share price has really had problems falling below $8. And so it seems like $8 is a nice little support level. If it breaks through $8, and that's an if, big if it does break through $8, that would be fairly bearish. And that would definitely be a sell signal, in my opinion. I'm not big on mining companies. I don't believe mining companies are long-term holds because of the cyclical nature of these businesses. And what I typically look for when I do a trade in any sort of mining company is the bottom of the cycle. 2016 was the best time to buy iron ore companies like BHP, Fortescue, Rio Tinto. It was the best time to buy many mining services companies because that was the bottom of the iron ore cycle. And many mining services companies are reliant on iron ore producers. But the thing you do have to watch out for is some of those companies, a few iron ore companies did go out of business, Atlas Iron, if I remember correctly, and quite a few mining services companies went bye-bye as well. So you do have to be wary of that. But the best time to buy mining companies is when the underlying commodity they are mining is at the bottom of the cycle, when the price of that commodity is low. Anyway, and products also suggest that the best time to take a position in the high quality mining companies, I should say, maybe not the best time to buy lower quality mining companies. There's a bit of a difference, and it all comes back to cost or the amount of money they have to spend to get the mineral or the commodity out of the ground. Corporate Travel Management, a company I do own, and when we look at the daily chart here, share price has been quite volatile over the past few months. The market's not sure what to do with corporate travel management. Is this company going to do good things or bad things? Are we going to do more corporate traveling or not? I've heard different sides of story when it comes to corporate travel. Now, actually, I could put a line here just at this level because those were the lows back in June. And if we do look at the 1 hour chart, we can see a lot of volatility in corporate travel management on the day they released their full year results. Now, I did have, a glance through look at these results. And on first glance, they look pretty good. But then again, it's on a very low base. So last financial year, the numbers for corporate travel management weren't that good. So they needed to grow their revenue, their profit by a significant amount to really impress the market. And again, the main reason a lot of these share prices of these companies go up or down a fair amount is not based off the numbers themselves, but whether the numbers are higher or lower than expectations. And this is very important, and any sort of guidance the company has given or any sort of trading update. That's the reason you're going to see share price of companies go up or down a big amount. It's not based off the results, unless the results are significantly different than forecast or guided. And again, if the company has released any sort of guidance for the next financial year. So in the first hour, share price of corporate travel management fell 9.4%. And that was when we saw the most selling. So a lot of selling in that first hour. And we have seen a really nice bounce in the share price. So again, I think it was just retail investors panicking in that first hour. And the share price did bounce off the lows we saw back in June. So a nice little bounce off the lows. But when you do look at the 1 hourly chart here, nothing to get too excited just yet. I'll probably need to see the share price get above 1940 to become excited about the chart. But again, corporate travel management is in my long-term portfolio. I don't mean to sell this company unless something significantly changes with the business. Now on to Reese. Now, I've talked about Reese in the past because the share price had been an uptrend, and I was wondering whether I missed it. Share price in a beautiful uptrend, and then the company released their full year results. Share price only down 2.4%, down another 2% today. I expected a more savage downward trajectory in the share price because I did have a look at the report and I thought it was worse than what the market thought. So even though it looked pretty bad, the market is it's not that bad of results from Reese Limited, and the share price is still in an uptrend. So just a possible buy the dip opportunity for Reese Limited. If we take a look at the hourly chart, another potential buy the dip opportunity just based off the hourly chart. And we're not seeing really big volumes. So that's the other thing. No really large amounts of selling going on. So fund managers who are owning Reese Limited have seen no reason to sell out of this company. Now to a company I think, in my opinion, this company is overvalued, significantly overvalued, and I have no intentions of buying this company ever because I just don't like the market they're in or the sector they're in, education business. That's IDP Education. If we do look at the daily chart, we have seen a nice reaction from the market based off their full year results. Share price rallied almost 10% on the day and has increased another 1.7% today, which is the 24th of August. But the share price has gone above the recent high we saw back in the start of August. So not that long ago. But look at this chart. It's not too exciting. Share price has fallen a fair bit. So probably the only reason I might get excited about IDP Education would be sort of a short-term trade, because when you do look at the hourly chart, this looks a little bit better than the daily chart and less resistance moving forward. Now on to Domino's Pizza. And this was another case, just like corporate travel, where the market initially overreacted to the downside. And you can just see that with the 1 hourly chart here. So the share price actually, the previous day, the share price closed at $48.12. And after they released their results, the share price was down to $45.10 fairly quickly. So again, I think this was retail investors saw, I think it was a drop in profit or something like that. They panicked when they didn't read the whole report, because if they read the whole report, they should have come away and went, "Oh, things are looking much better for Domino's Pizza." That's what I got from a very quick look at the result. Things are looking or moving in the right direction for Domino's Pizzas, and I was a little bit surprised the share price opened down. Not surprised by the reaction of the market after that first hour. A nice bounce to Domino's Pizza share price, and overall on the day the share price was up a fair bit. So the share price was actually up. Share price was actually up 11.8% after being down about 1 to maybe even 3%. So beautiful bounce in the share price, and the share price has remained at these levels today, only down 0.04%. If we look again, the hourly chart, the daily chart doesn't look as exciting as the hourly chart. This looks much better. So again, this is another company that's in my long-term portfolio. I put it in just based off the share price decreasing down to levels which I thought where the market was overreacting, and I thought the problems with this company were not structural; they're just short-term issues. And it seems like that is now coming to fruition. Same-store sales are on the increase, and that's the good thing. I think the only geographical region, if I remember correctly, that has not seen sales increase is Asia. And they mentioned something about Asians are less reactive to decreases in prices of pizza. I don't know. Anyway, so a good results from Domino's Pizza. From good results to bad results. And the first company we're going to look at here is Pepper Money. I don't think this company sells peppers. I'm pretty sure it's probably a loan company or something like that. Now, the share price was down. 14.2% on the release of their results, and another 1.9% today. But when you look at the chart, this was after a nice rally in the share price over the past month and a half. So share price is still not lower than it was 2 months ago. So this could, in fact, if you take away the last 2 trading days, this chart actually was starting to look a little bit bullish. So if they actually, in fact, if they release some good results and the share price actually went to say $1.70, this chart would be looking really interesting right now. But unfortunately, the complete opposite happened. And if we take a look at the 1 hourly chart, we haven't really seen any. Well, we did see a very small bounce in the next 3 hours after the first hour. So again, the market, I won't say overreacted in the first hour, but there was a significant reaction, a nice little bounce in the next 3 hours. But then that bounce was fairly short-lived, and share price is down to the levels we saw yesterday, down to about $1.30. So, which is a nice little support level if we look at the hourly chart, because you can see the lows we saw back in July. The share price is right on those lows. That's technical analysis does work. Anyway, I don't know much about Pepper Money. It's a recent IPO. In fact, if we look at the weekly chart, ignore this. Some reason, TradingView doesn't ignore. So the ticker code Pepper Money has PPM. That was a ticker code for another company on the ASX back in 2013, and for some reason, TradingView doesn't wipe the slate clean or the chart clean for any new IPOs, and they keep the old chart from the old company. But the share price of Pepper Money has been in a downtrend ever since they listed on the ASX back in, looks like May 2021. Now on to McMillan Shakespeare, and the volatility in this company over the past 2 days has been extreme because they released good results. And when I say good results, I haven't had a look at the results, just based off the market reaction. And this is the really interesting reaction from the market. And I think the reason the share price is down 10.4% today is because of Smart Group. So this is a beautiful daily chart. And then I thought maybe this was a breakout in the share price. But we did see a little bit of selling during the day yesterday. We know there was a little bit of selling because there was a little bit of a shadow above the main body. And then today, the share price is now down below the lows yesterday. So that's not a good sign. Volume today is almost the same as yesterday. Not high volume yesterday. So the market reaction was off fairly low volume, which is telling me the fund managers weren't getting excited about the half-year or full-year results for the company. And we can see that in the 1 hourly chart, just the extreme volatility in this company's share price. The massive increase in share price in the first hour. Share price went sideways the rest of the day, which is actually a good sign. So not a lot of selling, and then massive selling in the first hour today. And we have seen share price, hovering at these levels during the rest of today. And if you go back through the rest of August, share price was just going sideways at around $19.60. Share price now $19.72. So sort of an overreaction from the market, or initial overreaction from the market, and the market has corrected back to the levels we saw before that overreaction. Now onto Hansen Technologies. I'm not sure I should be including this company because there was a nice reaction from the market. And I think the reason I included this company was because I had a look at the results, again, a cursory glance, and I went, oh, it doesn't look good. Profit, cash flow, not up that much. So obviously the market was expecting results to be worse, or maybe the company put out some good, outlook for next year. When you do look at the daily chart, share price was developing or moving into a nice developing uptrend. Now, when I do look at that one-day candlestick on the 23rd of August, it's not that bullish. In fact, the share price almost closed near the low of the day, which is not a good sign. And today we have sort of a doji. The market is unsure. The bulls and the bears are fighting each other, and no one's winning right now. So maybe this is a nice little resistance zone, and that's backed up by this period back in July, August of last year. You can see the share price hovering between about $5.60 and $6.10 for about a month. So there would be a lot of shareholders who bought in that period and saw the share price drop after they bought in, who just wanted to sell out of this dog stock. Doesn't mean this company is a dog stock. That's their thoughts on this company because the share price dropped after they bought in. And the share price has got back up to those levels, and now they're selling out of this dog stock. So that's resistance, and that's why the share price is stuck in that zone right now, right in that zone between $5.60 and $6.10. The share price yesterday tried to get above the top of that zone, but we did see a bit of selling coming in. And I think you can see that in the 1 hourly chart. There was a little bit of selling, and the share price has dipped back into a nice little support zone, which is the above green zone, which is a moving, sort of the shorter term moving averages zone. So potentially buy the dip opportunity for Hansen Technologies. Nice volume too coming through, which is telling us again, this is more likely fund managers saw the report and got a little bit excited, maybe. Now to some, I think from now on, where actually the next two companies, Macquarie Technology Group and Telix Pharmaceuticals, released their results at the end of trading on the 23rd. So I did see them, and then I thought Macquarie Technology Group was okay. And I do think this company is a little bit overvalued. And obviously, based off the volume and the share price action today, down 6.6%. The market didn't like it. Share price was in a nice little 1 hourly uptrend. When you look at the daily chart, it was actually moving into, or was in a nice daily uptrend. And maybe this is an end to that uptrend, although there has been a nice little bounce today. You can see that bounce just on the daily candlestick. So a shadow to the bottom of the main body. Share price got as low as $62 today. And that's just sort of in a buy zone, a nice little support zone, that area. And we can see that probably in the 1 hourly chart. More than likely, the bottom today was in the first hour. No, I was wrong. In fact, the bottom today was in the third hour. So a lot of selling in the first 3 hours and then a little bit of buying in the next 3 hours. A lot of buying in the last hour trading. Telix Pharmaceuticals, when you look at the revenue growth for this company, probably one of the best revenue growth, or one of the best growing companies on the ASX. Now, you're going to see a lot of volatility in this company because they have a market cap of $3.1 billion. Now, if you look at the revenue last year, 2022, $160 million of revenue. Oh, they released their half-year results, not their full-year results. That should be made clear here. This was not full-year results, just a half-year results. So financial year 22, $160 million of revenue. In financial year 21, $7 million of revenue. And they're going to have revenue $500 million plus in financial year 23. I don't think they gave any guidance. So their revenue this half year, I'm thinking it was $220.8 million of revenue. So I think there's a good chance they're going to have over $500 million of revenue in this financial year. So we're going to see revenue tripling, not off a low base, tripling from $160 million. That's why the market cap of this company is $3.15 billion. And the other reason it's $3.15 billion is because of all the possibilities, all the potential in the pipeline for this company. Now, share price is volatile, beautiful uptrend in the daily chart, possible buy the dip opportunity right now. There was a nice little reaction from the market on open. You can see the share price did be a little bit dipping in the last 4 hours of trading. And the main reason behind that dip is because, again, a lot of shareholders bought at higher prices. They saw the opportunity to sell. That's all it is. That's all. That's what drives the share price higher and lower, is just sentiment. And when the share price of a company drops after a shareholder or investor buys in, they're more likely to think that company a dog stock, have a lower opinion of that company, and want to sell out. And that's why when a company keeps getting to all-time highs, that's actually a really good thing, because you don't have those shareholders on the books. Anyway, onto another company I own, Levisa, down 6% today. I think it was down about 10% at one point. A nice rally in the share price in the few days leading up to the release of these results. So don't get too excited when you see a rally. And the share price is right back to where it was before that rally. I looked at these results and I went, yeah, these are what I expected. Really good growth in this company. This company is going to grow for the next 10 years at really good rates, in my opinion. A definite long-term buy. And we do look at the daily chart. Share price had been in a downtrend back in May and June. Probably the market was fearing, because this is a retail company, that people will spend less money on really cheap trinkets and jewelry, which is absolutely ridiculous because of the lipstick effect, which is a real thing. I was doing some research in America, and the lipstick effect is thriving over there. When I say thriving, I mean a lot of people over there are buying small things. So lipsticks to make themselves feel good, not men, or maybe some men. So they're more likely to buy the smaller things than the larger items. And that's definitely true for Levisa. Well, I wouldn't say it's definitely true, but that's a possibility for Levisa, because they sell cheap jewelry, that sort of thing. Not that I know. I've never been to a Levisa store. I've walked past it and haven't seen any problems. Anyway, when you look at the daily chart, a lot of volatility, huge volume coming in through today. And the one-day candlestick, it's a doji. So again, the bulls and the bears are fighting each other. Now to the worst performing company today, Judo. I was a little bit surprised by this, because I had a look at this and I thought, without knowing this company much at all, I thought, based off the numbers I saw, wow, I think the share price would go up. Share price actually opened higher, and a lot of selling came in through the day. So the daily chart doesn't look that interesting. It's in a downtrend. So the only way I'd even think about buying Judo Capital is on the 1 hourly chart. But huge selling today. Now, remember some of the charts I've shown you, the 1 hourly charts, we saw that selling in the first hour and then a bounce. This is an instance where the low of the day was not in that first hour. In fact, the selling just kept on going, and it would have been prudent to sell in that first hour. You could have sold at $1.12, and the share price fell another 10% after that first hour. Now, the question here is any support area for Judo Capital. Massive volume today, huge volume, which more than likely is fund managers. Now, I'm going to go look at the weekly chart. I don't think this company has been listed all too long. And today is now an all-time low for Judo Capital, going down below the lows we saw in October of last year. This is an ugly-looking chart. Share price has dropped from $2.30 all the way down to $1.01. Markup is still $1.3 billion. Well, not after today. After today, it should be just over $1 billion. So trading views, market capitalization doesn't change instantaneously, unlike market index, which does change. So market cap $1.12 billion for Judo Capital. What else we got? What's this one? Oh, this is Smart Group. Their results did look weak, and so I'm not surprised by the market reaction. But the thing about Smart Group is the share price was in a beautiful uptrend. So the whole reason I'm owning this company was this beautiful daily uptrend. And we saw a nice reaction from the market yesterday. Share price got up to $9.60, or very close to that. And then today, based off their results, the share price plunged 9.99%. But the share price got as low as $7.80. So there was a nice bounce in the share price. So in actual fact, the share price right now is in my sell zone. So there's a possibility I will sell Smart Group tomorrow, particularly if we do see the share price bounce a little bit more, maybe. Well, if it bounces more, that would be a sort of a false break of the uptrend. So I'm not sure right now. So I'm just going to look at the 1 hourly chart. Yeah, we saw some selling in the first 2 hours, and a beautiful bounce in the next 3, and some really good volume coming in the last hour. You can see that massive share price increase in the first hour yesterday, 6.8%. So that was back on the back of McMillan Shakespeare, and the selling today was on the back of Smart Group's financial report. So it's really interesting. Two very similar companies had completely different reactions from the market. Now onto Ramsey Healthcare. This is interesting. So this is an old cult stock on the ASX. The reason it's a cult stock on the ASX, or used to be, was the beautiful chart. So if we have a look at the weekly chart, well, you have to go further. So we can't look at the last. Share price is just going sideways. So we have to go all the way back to the mid-2010s. And have to zoom out this for some reason. I don't know why TradingView, when I'm recording, for some reason it just hangs and hangs. It's not the system, it's just TradingView. So if you go back, say, to 2011 to 2006, this is a beautiful chart. Look at it. This was, I was a shareholder of this company, and I loved being a shareholder of this company. Growth company. At one point in time, I was even thinking of calling this the best quality company on the ASX. But look at the share price. Over the past 7 years, it has done nothing. In fact, if you draw a line, say the lows of 2018, the share price has fallen through those lows. If we look at the lows during the COVID-19 financial panic, the share price of Ramsey Healthcare is right on those lows or just above those lows. So the negative sentiment in this company is at 7-year lows almost. So I'm going to have a read of their report just to see if this is an opportunity, just to see if this is just an overreaction from the market. This is one sort of company that I thought once COVID-19 goes bye-bye, where this company should be having more growth in their elective surgeries, that sort of thing. So I'm a little bit surprised the share price is down a fair bit. So I want to see why that is the case. Now to a company called Step One. They sell underwear, and this is the weekly chart. And they list on the ASX back in late 2021. Share price got as high as $3.13. Share price now is 46 cents. You can just see, you won't see a worse chart. This is a weekly chart than that. Share price has been going sideways since May of last year. So we're talking about a 15-month consolidation period. Not only that, I put a nice little resistance zone at around about 37.5 cents. And the share price of this company has broken through that resistance zone in the last few trading days. So there it is. I have these alerts set up in TradingView, and a share price of a company breaks through a resistance level or support level, I get an alert coming up. And I had about 20 alerts for Step One because it kept going above and below 37.5 cents. Now, they released their results today, share price up 13.8%, but not the best looking one-day candlestick. And that makes sense because the share price was significantly higher when they did IPO. So you're still going to have a lot of people wanting to sell out. I was thinking, though, because the share price was going sideways for about a 15-month period, that a lot of those shareholders who bought around about the IPO or just after the IPO have already sold out, because when you see the share price just going sideways, not really rallying, those sort of shareholders just become bored, they become impatient, and they will sell. Even though they're selling at 30 cents and they bought at $3, they will sell at a 90% loss. So wouldn't be surprised to see, or to, if I could, to see that most of those shareholders have already sold out. So this is a potential buy, in my opinion, just based off what's happening over the past few days and the very fact that that resistance level has been broken. Step One. Not sure about the underpants, but some people have told me the underpants are pretty good. Now to Insignia Financial, or IWF used to be called, down 10.6%. Pretty negative. So the daily chart looks pretty bad. So the old lows we saw back. So what I do is I've already got a resistance level there. So I just put it down. And when I do resistance levels and support levels, I don't think of it as one single price. I think of it as a zone. So that support zone for Insignia is between about $2.50 or $2.60 and about $2.70. And the share price right now for Insignia is $2.60. The low today was $2.45, and we did see a bit of buying coming in, which is telling me that potentially this zone, this support zone, will hold true for Insignia for a time being. Now, I don't know a lot about this company, but I would not call this a high-quality company. And in fact, if you look at the weekly chart, share price has been a downtrend ever since 2018. Share price has dropped from $11 to $2.60 just based off this chart here. This is definitely not a buy at all. It could fall below that support level on ease. Now to a company that I used to own. I used to think this was potentially one of the cheapest stocks on the ASX. And based off some of the announcements this company has released recently, this company is looking interesting. And I thought maybe there'll be more interest in this company today. Not so. So this company has a market cap of $85 million. So let's have a look at some of the numbers for McMillan Services. Remember, markup $85 million. Which one shall we open up? Preliminary final report. So $85 million. So revenue up. Well, they don't have a percentage change here. Oh, yes, they do. 14% to $243 million. EBITDA up 28% to $41 million, which means this company is trading on 2 times EBITDA. Profit up 100% to $7.6 million. So, well, yeah, I suppose the PE ratio is actually above 10. I thought it might be a little bit lower than that, but above 10. So maybe the share price of this company is trading at fair value. But 2 times EBITDA, now this company would have a fair bit of depreciation because they have a lot of drills. And I'd say drilling machines need a lot of maintenance and they cost a lot and you might go through them fairly quickly. I don't know. But interesting company, McMillan Services. You'll notice, if you can see it, I'm not sure if you can see it, that in this PowerPoint, it's titled Washington H. So that's Washington H. Soul Pattinson. They are a major shareholder in this company. So it's really interesting to see some of the titles of these documents. Some of these documents are titled fairly weirdly, just like this one, Washington H. Anyway, McMillan Services. So no reaction from the market. I'm just interested because I think this company could be a good value right now. Should I talk about Hum? I've only got 4 companies left. Hum. Down 5.1%. I'm not going to talk about Ape because share price was down a lot more. Oh, heaps of volatility in Ape, which is AP Motors, but I'm going to get rid of Ape. And Hum. Come on, TradingView. Hum. So down 5.1% today. I'm not even sure I should talk about Hum. Yeah, I'm off Hum. Anyway, Laser Bond. This is a company I own. This was an opportunistic buy for me. I'm going to have a look at the daily chart to see exactly when I bought. So you can see this dip back in June, started June. Share price fell from 94 cents down to just about 70 cents or above there. I took a position in this company on this drop in the share price at about 71 cents, 72 cents. And the main reason was just value. Just value. It wasn't based off the chart. I just saw some value in this company. The market cap I thought was at good levels for a company that I think can grow quite well in the future. And they released their full year results and share price up 7.7%. So let's have a quick look at Laser Bond. Their nice growth in the company today. I probably thought the reaction from the market could have been a little bit better. Well, they have a 5-year summary. Oh, I'm going to have a look at that later. So they released 7 announcements today on the 24th of August, but only one of these was price sensitive. We'll only get notified of price sensitive announcements. So anyway, Laser Bond, revenue up 25.7%, profit up 31.1%, earnings per share up 23%, net tangible assets per ordinary share up 15.8%, dividend up. Well, it doesn't say how much it's up. It's only 1.6 cents overall. So I think this was really good results from Laser Bond. It actually exceeded my expectations. I do have expectations for all companies I own, and I was pleasantly surprised by these results, particularly because I took a position in this company. And if the share price didn't drop to say the low 70s, I probably wouldn't have bought a position in LaserBond. So this company is in my medium range portfolio. So I hope to own this company for as long as possible. And the last company I want to talk about, which was thrown in the list because I was a little bit surprised the share price had dropped a fair bit today, 10.8%. You can see this major rise in share price on the 30th of June, 4th of July. That was a takeover bid. So you can see the share price going sideways after a takeover bid, which is very normal. So I was a little bit surprised to see Costa Group's share price down 10.8% today because I have not been following this company at all. And the reason behind that was they did release something. And this was the title, Trading Update and Postponement of First Half Calendar Year 23 Results. So I probably should have left this talking about Costa Group until tomorrow's video because these are not results. Well, sort of those results, but trading update and postponement. Yeah, I'll leave this. I'm going to leave Costa Group to tomorrow's video. I've got to write it down because they did not release half-year results or full-year results. And this video was dedicated to those companies that released full-year results. Now, what company had a bad date? Was it Pental? No, it wasn't Pental. It was Perpetual. Close. PPT. So instead of Costa Group, we're going to look at Perpetual. I don't follow this company at all. Are they a fund manager? This trading view is so slow sometimes. Market cap 2.8 billion, dividend yield 8.1%. Pretty sure this is some sort of fund manager or something. Independent and diversified financial services group, which provides specialized investment management, wealth advice, and corporate fiduciary services, blah, blah, blah. Anyway, they released their full-year results and share price was down 6.5% today. Looking at the weekly chart to see if there's any, it looks pretty weak on the daily chart. Weekly chart looks really weak as well. So downtrend. Share price has bounced off the lows we saw. In fact, I do this a lot when I'm looking at a chart of a company for the first time. I haven't looked at this company forever, probably. And that line I just put in there is a support line or support zone. That was the low during the COVID-19 financial panic. Also the lows we saw in March of this year. So that's a nice little support zone. But this would not be a high-quality company just based off the weekly chart. Looks like if you go back all the way back to 2015, each successive high is lower than the previous high. That's a downtrend. So before 2015, share price was actually in an uptrend, but this is an ugly-looking weekly chart, and there's a reason why I have not looked at this company, and this chart is the reason why. Anyway, that's probably all I've got for today's video. I don't think I've gone through all the companies that have had a bad day. I've gone through all these, looks like. Didn't go through Cedar Woods, IGL or IVE Group, and Rebel. Anyway, so if you have any thoughts, any questions about any company I've mentioned in today's video, just leave your thoughts, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.